For more on Tesla as well as a check-in on the market action, let's bring in George C., Annandale Capital founder, chairman. George, we've been getting a lot of warning signs here about the frothiness that's been happening in this tech rally. What do you make of it?
Thanks for having me on. I would say I think we may be in the dog days of summer and sloppy summer trading and lots of people on vacation because the market looks pretty soft and pretty tired right here. And with the kind of market we've had so far this year, which has been just enormous and unexpected, it makes sense for the market to chop for a while here. And as we go into the fall, which is historically the weak part of the year, whether it's Tesla or NVIDIA or Microsoft or a lot of these tech stocks that have taken leadership, for them to pause and refresh at a minimum, maybe more than that. And investors should probably look at some of the things that haven't done as well this year and are very, very reasonably priced at this current time. So you may want to trim a little and add a little in certain other areas.
All right, so let's get straight to it. What else are you looking at, perhaps as a somewhat of a catch-up trade here?
Yeah, the discount store factor with the potential for a recession and with some weak earnings reports recently has really taken down Dollar General and some other comparable companies like that. And I think that's a great place to look because that's a very, very fine company and a great long-term investment. And we also think the upstream oil and gas space has been really thrown out because it's so out of favor politically these days and with many institutional shops in terms of owning these firms, and their balance sheets are immaculate and they're buying back tons of stock. And I think that long term, there's a secular bull market that's coming in commodities. We're having a pause this year and we've had some diminution in the price of natural gas and to a lesser extent oil, but I think this is a great entry point for stuff like that. So it's a market of stocks, not a stock market. And there's always something to do in the market. You just have to be nimble and trade around your core positions, keep core exposure to the markets, but trim a little here, add a little here, depending on what's attractive at that time.
Yeah, let's talk about oil and gas. It feels like it's tough to replicate the kind of performance we saw last year. Sure, they have fallen. Maybe this is a good entry point to your point. But what do you see as the next catalyst that could move stocks to the upside, at least in that sector?
I think there's quite a few, actually. I think we're going to see a lot of M&A because some of these smaller players just really can't compete on their cost structure with some of the bigger players. So I think there's going to be a lot of acquisitions in the next 2 to 3 years. I think the commodities are going to come back strongly and the stocks always rally during periods like that. And then you have managements that are really aligned with shareholders for the first time in 15, 20 years in this space. Previously, management lined their pockets a lot and overspent on the capital expenditure side and really didn't generate any free cash flow. And now it's exactly the opposite. These companies are generating gobs of free cash flow. Many of them are paying very high dividends and they're buying back tons of stock with that free cash flow. So even though commodities are a bit soggy right now, I think that's a gift for an investor who's got a 2 to 4 year perspective, because I think you can get in very inexpensively right now on any potential metric and buy and hold and make a really nice return.
We talk a lot about recession and the expectations for it. Is it going to be a hard landing, soft landing, no landing? But one of the things I've noticed historically that tends to precede a lot of recessions are oil prices, high oil prices. Oil prices double. A lot of times after that, you get a recession. I'm just wondering, if you're looking for this commodities bull market there, is that potentially on the back of a Fed that hasn't been hawkish enough? Is this playing into any kind of recession prediction that you have personally?
Yeah, I have actually been calling for a soft landing being more likely than a hard landing for over a year now. And so far, that's what's played out. But we could still get a hard landing. Who knows? I can't predict interest rates or commodity prices or the economy. But what I can look at is companies that have completely restructured their balance sheets and are very healthy from a cash flow perspective and have a very bright future. I think with all the political virtue signaling against oil and gas, that we're going to have a supply problem eventually, especially with the shale plays running out of prime drilling sites to add to supply. And the global demand for these commodities is going up, not down. So I think that's a really good setup for investors over a 2 to 4 year period. It's not a trade, it's an investment. I don't know what's going to happen in the next 3 to 6 months. It may go down even further.
All right. A big thanks to George C., Annandale Capital founder and chairman.